Good afternoon, everybody, and welcome to our 6 Ways to Improve Your Motor Book of Business. I'm Alison Moriarty. I'm the Managing Director for the Drive Division within Matrix IQ. I'd like to introduce Dylan Taylor.
Hi, I'm Dylan. I'm the Insurance Partnerships Manager at Matrix IQ. I've worked for the company for close to 4 years now, and in the last 2 to 3 years, I've been working specifically with insurance.
So I come to Matrix IQ from an operational background, having run the fleet risk for several large fleets, including Skanska, Arriva UK, and Enterprise. So, used to running big fleets, used to working very closely with our insurers and brokers to make sure that we understood how we work together. I also run the fleet risk interest group for ERMIC. So we've got some events coming up, which I'm sure some of you attend anyway. And I'm sure a lot of you were at the ERMIC conference this year, which was really good for us. We met lots of you, which was great. So I'm really going to run this session, but Dylan can chip in when he feels he needs to, Dylan, or if I feel I need you to, because I'm trying to look at this from a fleet risk perspective, because it's all about how we look at driver behaviour. And I think, there'll be lots of things we discussed today that are important, but the real crux of this is all about how we manage driver data and how we look at driver behaviour, and how that then can inform us to put interventions in place, or for yourselves to look at how you decide on premiums for various companies. So we'll set off. If anybody has any questions, please do email us after the event, and we're more than happy to get back to you, to give you a ring, or to email you back if you have anything specific. We'll try and be as comprehensive as we can, but there may be things that obviously trigger a question in your mind, so please feel free to contact us. Okay, so this is what we're going to go through today. What is tech agnostic is probably the nub of all of this, really. It's about how you can look at your data, and then we'll go through how that can inform all the various bits of process that you use before you insure a fleet. So tech agnostic is something that I really, really wish was available when I was running an operational fleet. In just a fleet of 3,000 vehicles, I probably had about 3 or 4 different telematics systems. And that was because we had lots of legacy systems from taking on new contracts, or contracts that were just running out, but we'd got new fleet. And just to try and look at the fleet risk and look at where our profile was, and to look at, more importantly, where we needed to target within the fleet, was really difficult, because the information that we were getting was from 3 or 4 different platforms that had different weightings against different things. So some people thought speeding events more important, braking events more important on one of our platforms, and it did make it really difficult for us to put a proper strategy and program in place for improving fleet risk. So this will allow you to take in all your data from however many telematics providers or OEMs now, and they're becoming increasingly more and more OEM devices. I think the black box have probably had its day eventually, because all vehicles are going to be coming out with their own OEM data. But I think crucially, even those will have all their own parameters, so you're still not going to get a sort of apples for apples comparison for them. So by taking in data and normalizing it and coming up with a scoring process that lets you look at lots of different fleets and benchmark against those fleets, it gives you a really clear view of the risk profile, and to be able to actually put them into an order and see where your risk is. It also gives you, importantly for yourselves looking at taking on new fleets, you can use the historical data from it, and that's probably going to be, important for some decision making about not just premium, but whether you even take fleets on. So really important for you. If I struggle with 3,000 vehicles, I'm sure that on your motorbook, you have a lot more than that, and you will probably, I would have at least 10 plus telematics units. So taking that data and actually being able to put it into AS score across all fleets, I think is it's going to be crucial, I think, going forward. And I think it is the way forward for you to actually make some pretty big decisions when you're going forward. So increasing your total available market. Obviously, you know, there has been historically a press for mandating particular types of telematics by different insurers. And this is probably difficult for yourselves as insurers as well as it is for fleet managers, because I think probably people change their insurer more frequently than they change the telematics provider. And that's because, you know, a lot of telematics contracts can run for 5 years plus. And sometimes, you know, that not everybody has long-term relationships with insurers. So it becomes quite onerous for a fleet manager if they've got to start thinking about changing telematics just to use an insurer. And I think, you know, the upshot of that is that some insurers will just be out of their picture because they know that they're mandating. This means that you don't need to do that. There's absolutely no reason to mandate any system because all information can be pulled in from all systems. You're not having to make the policies heavy on, you know, in terms of cost, because you're not having to put telematic systems in, or you're not requiring fleets to have to do that because they've already got them in place. They've already got contracts in place. So, you know, it means that you can look at any fleet, and if there's a fleet that you find attractive to put on your motorbook, if you think that that's a fleet we'd like to have, it's actually relevant then to you which telematics company they have. And that's quite powerful. You know, that means that it really does open your market up. It also removes the friction. You know, as I said, fleet managers, and I'm talking about, you know, me operationally, if an insurer had come to me and said, oh, you have to change your current provider and use this new telematics provider, then I just would not have considered them for that renewal process, because it's such an onerous task and it's so expensive that it probably definitely, you know, it's going to close your market if you do that. And you don't want friction before you even start a contract with a fleet. And I also think, you know, looking at sort of historically, things like blended fleets, and I think this is where I can see the biggest improvement and the biggest market opener is where you have blended fleets, where you, obviously fleet insurance is, as mine was at the beginning, included in my buildings and in my security insurance. And it was never very attractive to me to have separate fleet insurance because there was nothing really in it for me. You know, it wasn't something that, and I think from an insurer's point of view, you know, there may have been a similar feeling that it was better just to bundle everything together. But I think now, you know, it gives you a bit of an edge to be able to go into a fleet and to make it an added value thing. So to put incentives in for good driver behaviour, which you can pick up from the data that you're receiving from, you know, this aggregated data. And I think, you know, that's really, really powerful for you to be able to go in. You can even say to fleets, you know, if you improve your data, then we can look at putting bursaries in to put training or other risk improvements in. And it just gives you that better relationship. You know, I think it opens it up to be more of a partnership and just less of an insured relationship, which going forward, you know, everybody's looking to write more business. And I think it can give you a bit of an edge with fleet managers. So looking at automating your pricing decisions, and I think probably the one thing that's really important with this is allowing the data that you receive, because it is very clean data, to then start to overlay things like claims cost and claims frequency over that. And what you can do then with each fleet is look at the correlation between the improved driver behaviour, or the fleets that already have good driver behaviours in place, to have a look how that correlates to the claims history and cost of claims. And I think it's quite important to look at cost of claims as well as claims ratios, because when we're looking at speeding events, which is one of the major things we look at with telematics data, because we know that it's not only one of the biggest contributory factors of serious and fatal injuries, but even in injuries where there's no third party actual, you know, there's damage but there isn't any injury, it still means that your cost per claim is going to be greater, because hitting a vehicle at 50 or hitting a vehicle at 40 makes a big difference to the amount of damage and therefore the claims cost. So for your third party claims, you know, in particular, really important that you can overlay that and look at where that's happening. And that then gives you a really easy conversation, I think, to go into to fleets and speaking to them about it and looking at ways they can improve, and looking at, you know, these pay how you drive schemes. And I think this is being looked at as well across certain leasing companies, because obviously, although maybe not from an insurance point of view, but for them more of a maintenance and repair cost, really, really important that you know how people are driving the vehicles that you have that engagement with. So, you know, identifying fleets that you've already got that you may have had for some time, or you may have, you know, only had for a couple of years. It's really useful for you to be able to add value into those fleets and to, as I said before, become proactive. So it's not just the insurer's there for when something goes wrong. The insurer can look at how you're going, how your claims are going, and start to come in and look at the trends and say, you know, we've noticed these behaviours, and we've noticed that where these people are speeding, you're having this much more accidents, and all those sort of things that are really, really critical for a fleet, but critical for yourselves as well, to be able to identify that and to go in and become almost like a third part, not a third party, but like another part of that fleet risk team. And I think that's really important. And I had a particularly proactive insurer who really became part of our team, and they were in and they came to our fleet risk meetings, and it made a huge difference. So I think being able to do that is very, very important for you, and allows you to implement proactive risk management strategies. And not all your fleets will have somebody in place who's got the expertise to do that. I think particularly over COVID and furlough, we noticed in the industry that unfortunately a lot of the people who were put on furlough quite quickly during that time, and also a lot of the people who didn't come back after that time, with the fleet risk community. So I think you'll find that probably within some of the fleets that you already have, maybe there was a level of expertise there that isn't necessarily there now, and this almost allows you to become, certainly, you know, to an extent, to become that expertise and to give that advice and guidance. And obviously it's in everybody's best interest that we lower risk and reduce collisions on fleets.
If I could just pipe in, as you say, on that last one.
Yeah.
We ran a trial with a risk management solution within ours, with one particular fleet who were going through 100 tires a month, terrible driving, and an accident waiting to happen, really. And through identifying the worst drivers and using the risk management strategies in place, we managed to come renewal on their insurance. They made a premium saving of over, I think it was £183,000, not to mention the maintenance, the wear and tear, and of course making sure all the drivers got home at night.
Yeah, I mean, that's really important, Dylan, as well. And I think that's where that partnership approach is something that is going to become more and more important. I think that people are working together. It's not just third party supplier and company. I think there's I think the approach now is much more about working together and trying to improve things as a team as well, isn't it? Which works really well. And so measuring the impact of risk management strategies, and I do think this is really important. And I think it's important for me to kind of put my hand up and say that when I first started to look at fleet risk, so I'm from a health, safety, environment and quality background originally, I really started to move into looking at fleet risk about 14 years ago, when I worked for a huge utility company. And we started to implement lots of measures that we knew, you know, were good. They were all certainly safety focused. I probably introduced 3 or 4, maybe 5 right at the beginning. And they were very successful, you know, and reduced our incident rate by about just 40%, I think, in the first year. At the end of that year, when I came to evaluate that and look at, okay, so where we're going to put the resource next year, what are we going to focus on? And we had our insurers and brokers at our meeting to speak about. I suddenly became aware that I couldn't actually pinpoint which of the strategies, which of the things I'd done that made the difference. And it's really important, you know, that we need to be able to assess the effectiveness of the things we do, not just to see what's worked before, but to actually then focus on what we're going to do going forward. So I think, you know, that's something that you can be involved in as insurers as well, working with fleets, to actually look at what they're doing and look at, you know, so I think if you've talked to a fleet and they've put speed limiters in the vehicles, that will be very evident on the data that's coming through. And then to look at those vehicles and look at the amount of collisions that are happening, that speed's a contributory factor, and maybe another part of the fleet that haven't got those in yet. That's really powerful to be able to do that, to have a baseline. And that's really quite easy with most fleets, because very few fleets do a full fleet renewal in one go. We tend to do, you know, a division by division, because it's expensive when you're changing out the fleet. And I think, you know, this sort of data, because it's normalised and because it's clean, makes it really easy for you to be able to overlay those data sets and say, oh, actually that made X amount of difference, and then that can be rolled out across the fleet. And I think by insurance companies being able to almost take the lead on that, and to be saying to the fleets that they're working with, listen, we've got this data, we've overlaid it, we've seen this. Again, you become really, really valuable as a partner to them, and somebody that they can see. You're not just there to pay the money out when things go wrong, you are there to actually stop things going wrong. And I think, you know, that will be probably how maybe the insurance business is going to change slightly going forward now. And I think it's a really, really powerful tool if you can add value to a fleet and actually reduce claims, not just pay out for claims. Have I just gone backwards or forwards then? Oh no. I never know. I sometimes get very confused with forwards and backwards. Not when I'm driving, I hasten to add. Well, that would be a very, very poor example for this webinar. So making your underwriting decisions, and I think historically it's all about claims history, you know, and understandably, and it's whether companies have met their loss ratio targets in the year. And I think, you know, obviously that's always going to play a part, and that's going to be a major part of your decision making. But I also think, you know, this using the data will enable you to certainly look at new fleets and say, well, historically, what's your driver behaviour been like? And one of the important things about that, and we will touch on it as well a little bit later, is just merely looking at the collision history. If you're just looking at a frequency rate, doesn't always give you a picture of how a fleet's being driven and what the risk of the fleet actually is, because fleets have very different ways of recording what a collision is. And I know just from the companies I've worked with, you know, 4 big fleets, 4 completely different ways of recording damage and collisions. Some people record everything. Some people record what they want the insurance companies to know and what they can get away with, they don't. But also, you know, some drivers don't record collisions, or you know, if they have going to reverse into a post or things like that. But actually then the off-hire damage takes a completely different story, that might not come through to you until 3, 4, 5 years, until that fleet's being renewed. So what this data does for you is actually give you that information prior to you insuring a fleet and prior to you deciding on the premium, because you can look at the historical driving data that will not only have all those driver behaviours, but should have all those crash detection points where those impacts were recorded. So it just gives you a much bigger and a much more holistic picture of a fleet before you take them on. And you know, I also think talking about ethanol, it's very much the same thing, that if you're reliant on a driver to tell you that they've had an incident, and you know, all of us who've worked with fleets, really, it's one of the things that we really push with drivers, that golden hour that I'm sure everybody on this call is more than well aware of. You know, it's capturing that third party if there is third party damage, capturing that hire for a third party vehicle, but also just capturing any injury that's actually occurred, how many people were actually in the vehicle, all those sort of things that can, we know can double a claim if that information isn't captured straight away. What this does is capture that impact straight away. So, you're getting that accuracy, and you're getting the false positives, which obviously from an insurance point of view, we can see on the data where there might have been a really huge seemingly impact, but if the vehicle's driven away literally seconds after, then that's probably a driver going over a speed bump very harshly or banging into a curb. Obviously not a false positive in terms of driver behaviour, because that's still a behaviour that's going to cause a company money, because obviously it's all the repair and maintenance cost. But for yourselves, you can see straight away that that's not something you have to jump on to identify the possible third-party damage. So that should, reduce your average claim costs. And also it helps you to negate those spurious claims that come in. So where people have seen a vehicle with the name emblazoned on it of a particular company going down the street, and they've knocked the wing mirror on the side of the garage 2 weeks ago. It's too easy in the past, before we had telematics and cameras and things, way too easy to say, oh, your vehicle was down my road at 3 o'clock on Monday, and bang the wing mirror, and really hard to refute for a company or for an insurance company. But actually now with the telematics and with the ethanol crash detection, and also with the tracking, it's so easy for you to be able to go back and say, well, that didn't happen. Yes, the vehicle was in the area, but there was definitely no impact. So again, that's all about getting rid of claims and reducing the claim cost where there are any. So, Dylan, is there anything you want to add to that?
No, you've pretty much gone through everything. We haven't had any questions through either. So what I'm putting up now is a little link here to our insurance content hub. It's got lots of information on there on how to improve loss ratios, manage exposure to risk with this tech agnostic driver's risk scoring. But sometimes just approaching Alison or I is probably the best way. So our email addresses are on there as well.
Yeah, and I'll just add to that obviously working particularly with AMIC at the moment, chairing their special interest group, the fleets that we're talking to predominantly are very large fleets. I mean, they come from retail, utilities, construction, so it covers pretty much the whole of the driving community. And one thing that a lot of them are saying, as I said at the beginning of this, is we don't really have the expertise within the business, or we just need a steer. And that's what we're trying to talk about on those groups. But that is, I know I've said it a few times, but I can't emphasize it enough. I think some of the real value that insurers can add to fleets when they go in to insure them is to just give them those steers and highlight where their risk is, and to maybe give them some ideas of solutions. So if anybody, wants to talk in more detail about that, then please contact me. I've been there, done it, made the mistakes, admittedly, but also made the improvements as well. Happy to share anything that I can with you. So I think it's good night from me, and it's good night from Dylan. But please do ask any questions, and thank you very much for your time today.
Thank you.
Thank you.